These remarks being made by Hu Jintao that Europe can fix its problems, so we're getting a similar message out of Europe saying, but we do need China's help. But the Chinese aren't going to buy their paper, are they? They want more substantial things than that, infrastructure, etc., things which are tangible and give them, income, I suppose.
Yes, if you look back at, in two or 3 years ago when we had the global financial crisis, what China said was that we need to get the economy up themselves, and that will help the whole global economy. So I think this is some sort of working along the same lines this time around, rather than buying papers directly. I think there's going to be something more.
Yeah, they're going to extract more out of this, aren't they?
Yes, yeah.
I mean, that's the thing here, isn't it, Nick?
That's right. It's going to be. It's not going to be a free money or free lunch. And
there are a lot of, for instance, in Italy, there are a lot of things which are still nationalised, which haven't been actually privatised, as Silvio Berlusconi had promised before, and they could be looking at those companies quite closely.
Yeah, well, it could be. But if you look at what they're targeting, it has always been energy or resource related. So I'm not sure whether just buying or just investing into infrastructure over there that may not have significance to China in a longer term, and that could be a concern. Yeah.
Well, they control Piraeus port, don't they? After all, that's one thing here as well. I want to just ask you more about this, but let's just get your first view on that PMI number that we had out of China, the Purchasing Managers Index, way below estimates.
Yes, I mean that has been more or less expected by the market. I mean, people are looking actually forward, not looking at the PMI at the moment. I think a lot of times people have already factored a slowdown. It's still above the 50 mark, I think, so that's still expansionary. There's definitely a slowdown, and that's largely due to credit tightening. And the market is watching the credit very closely in terms of whether the Chinese government will loosen some of the very tight monetary policy.
Got your reaction to this, but how does this play out? Is it really something that the markets are going to shrug off?
I think the market will be looking more at other things rather than just this PMI, because as I mentioned earlier on, it was more or less expected by the market there could be a slowdown, but not too bad. I mean, it's not
much worse a slowdown than actually the economists are looking for. 51.8, we've got a figure of 50.4. Okay, it's not contracting yet.
Yeah, it's not contracting yet. Yeah. And with the monetary policy being so tight for so long, I think that there should be some assumption at least that the economy is going to slow down.
So is there, any chance now that we do see an easing in the reins that China has put in place as far as the monetary side goes?
There's this higher likelihood now that there will be an easing, but the Chinese government doesn't like to do it in an abrupt way. It's going to be rather gradual, and I think it's going to be quite gradual easing rather than a sudden easing. Because one big factor here is still inflation that remains stubbornly high.
How has your investment strategy evolved of late?
We don't change our portfolio. We continue to stick with.
Because you have very long-term holdings.
Very long-term holdings. We continue to stick with the companies that we know for a long time, and these are the companies that can ride through the ups and downs. And in times like this, I think we need these type of companies even more. So stop picking again and picking the right companies, the quality companies, defensive companies. It's the main strategy.
Yeah, I want to get your view as well here on when you see the Hang Seng and how it's trading, it's incredibly volatile. I mean, if you see the other markets down 2%, it's down 4-5%. On the truth is also when it's on the way up, it's also exaggerating moves. Why?
Yeah, it amazes me as well. I mean, it has been the case for the last couple of years. There could be a few reasons. One of them could be that this is a hot pot of hedge funds as well as money flows. This is the main center of money flows, and there's so much money coming through here than many other regions in Asia. And as a result, hedge funds would tend to play on negative news, and now we're getting this wobbly Chinese economy, so they are playing on the fear. Yeah.
Okay, so is it also a lot of short squeezing going on and vice versa?
There's a lot of that going on because of this volatility in the market, and they love it, and so there could be shorting, and they could be panicking as well, could be covering on the next day if the news comes back, which turned out to be a positive one. So there's a lot of this volatility going on, and it's likely to be the same for the remaining of the year as long as we don't get that clarity on the economic front.
Okay, I talked about how your strategy is evolving. Of course, it's not particularly, but what about asset allocation, that sort of thing right now? How positive are you on the equity markets as opposed to other parts such as bonds, etc.?
I personally don't do that sort of allocation. But in terms of equities, I can only speak for equities, and that continue to be reasonable, but probably in the short term there could be some pullback after the very sharp recovery in the last few days or few.
Yeah, but what an October it was, though. Quite something.
It was a roller coaster ride. It was one of the biggest volatility that we have seen for a long time, and as a result of the recovery that we have seen last week, I think there could be some pullback again. Because there's no clarity.
Yeah, I mean, what happens in November, I guess that Cannes is going to be incredibly important, and events at that G20 meeting.
Yes, that's right. So as a result, I think people are looking elsewhere. The whole global economy could be on the verge of slowing down already, but maybe people are just focusing on Europe, forgetting that the underlying economy could be slowing, and people should be cautious. But then again, I think equities have largely reflected that. Throughout the whole of October. Now there could be some pullback, there could be technical pullback, but they still look reasonable for a number of the quality companies.
Yeah. Nicholas, thank you so much. As ever, Nicholas Yeo there, he's from Aberdeen Asset Management.